Hello and welcome to Property Question Time. I'm Stephen Galpin and the show today is about answering your questions related to property. We're coming to you today from our studios in Canary Wharf, London, and helping me answer your questions is Sara Newson of Realm 47, Property Investment Experts. Welcome to you, Sara.
Hello, Stephen. Thank you.
And Lucy Waters of Aria Finance. Welcome to you, Lucy.
Thanks, Stephen.
Okay, Lucy, you're going first, and your first question is this. Buy-to-let finance for the last few years has been fairly easy to access. With profitability in that sector taking a dive, mainly through new taxation and increasing legislation, will lenders be willing to readily fund diversification into other areas of property investment, perhaps even commercial property?
Yeah, we've seen that already, actually, Stephen, and I think there has been a real shift from the mainstream buy-to-let to what we know as the specialist buy-to-let market. So the mainstream buy-to-let focuses more on individual ownership buy-to-let properties, usually where people have one or two and they've done it either, through some additional funds they've got, retirement funds, things like that. And that tends to be for your more mainstream lenders. And we've seen a real growth in the specialist end of the market where lenders are attracting HMO properties, SPV lending, which has obviously become really popular since the ongoing tax changes. So there are definitely more products already available in that side of the market. And we've seen a lot of growth where some lenders might have lent on a HMO that was perhaps a small HMO. Then they start to go to the 7-bed HMO and 10-unit, multi-unit freehold blocks and things like that. When it comes to commercial lending, that is a completely different ballgame. So that is a different type of funding. It's a different type of lender. But you do see more and more lenders stepping inside those product categories, albeit it tends to be funded differently. It tends to be a completely different operation within their business. But lenders are looking to where there's opportunity and growth, especially with rental growth, which is what landlords need.
Are you finding a sort of relaxation of rigidity, if you like? Because I mean, the reason I say that, just going on from this question, you've got buy-to-let specialist lenders who have been stuck in that tube, okay? Have in the past have been a little bit reticent to look at anything else. I'm also thinking of bridgers, perhaps in particular, who, yes, will do the bridging, but don't come to us at the end to do the extended lending because we don't want to know. But all of a sudden they are. Now there's a little bit of fluidity there, isn't there? Yeah. I think that's a good thing, isn't it?
Yeah, look, for everybody involved, for a lender trying to capture a client and the entire value chain of somebody that's buying a property kind of being mortgageable, then being able to take it to the long-term hold if that's somebody's strategy, that makes a lot of sense for them rather than having it go over to a competitor who might offer one of the other products that they offer. And then they could actually lose the life cycle of that client on the next transaction, because often these people are repeat borrowers as opposed to one-off transactions. So there is definitely an awakening in the lending market to diversification across these products.
Are we moving back to, shall we say, loyalty on both parts?
Do you know, there is always a pocket of loyalty in the market. And we deal with some customers who I know will only deal with us as a broker, and they like to deal with specific lenders who they've had good relationships with and who have looked after them. And there is also, especially at the moment, given interest rates are higher and everybody's trying to chase better returns, there is a lot of shopping around. There's a lot of people that are kind of looking to find the absolute best margin out there. And that strategy can be flawed because there is a risk that somebody goes down the wrong avenue chasing a headline rate and ends up with something that's not deliverable. So there's a balance to be had, and not everybody is as loyal as others. And obviously loyalty can only take you so far. You have to be within the ballpark of pricing to retain someone's loyalty. Yeah,
okay. So you have a lot of buy-to-let customers that you advise and look after. Are we seeing a real exodus from that particular market at the smaller end?
To a degree. We're not seeing it too much, but if you go on to the social media channels, you are seeing those people who manage their own properties exiting. It is quite commonplace for them to be saying, that's it, I'm done. We are seeing a lot of professional landlords in the marketplace anyway. So, for every property we're selling, we've got another investor buying. That's what we do. So for us, most of those investors who are selling are moving into a different strategy, or they are consolidating, not necessarily leaving the market altogether.
No, I suppose it's the same old thing though, isn't it? If there are a lot of people coming out of a market, what a time to buy.
Yes, yeah, absolutely. Yeah.
Out of disaster comes opportunity.
It really, really is. Right now is a great time to be looking to buy, because there's a lot of people who are fearful and they're sitting on the fence and they're waiting, and that's when you get your great opportunities come along. But I have to say, in this current market, when we've seen it before where landlords have said, yeah, okay, I want out, I will accept quite a substantial discount on my property, I'm not seeing it so much right now. People would rather sit and hold their property and get a fair value for it.
Okay, good. Okay, thank you for that, Sara. Sorry, your question is this. Do the panel think that for the smaller landlord, it's perhaps time to come out of buy-to-let? The government seems very keen to discourage the smaller landlord and encourage the institutions to provide rental stock. If this is the case, what sort of diversification would the experts suggest to replace the BLT investments?
So that is, I think, an ideal that the government are looking at, which is passing the private rental sector across into institutional ownership, which for me is a bit of a dream. I don't think it's realistic when you deep dive into how that's going to work and whether it will work. What we're seeing now is institutional investors and large corporations going for build to rent. They're going for economies of scale. They want properties that are central, where they're going to get growth. So city centres, the likes of Manchester, we know there's good growth happening there. They're looking at it from that business perspective, from the corporate perspective. Economies of scale, they want multiple apartments in one block. So also with refurbishments, they've got properties right now that are beautifully done, finished, brand new, high rents. In 20 years' time, they'll be able to refurbish them all at the same time or rotate them. Economies of scale. That's what they're looking at. That's what they're getting into, some of this bigger student stuff. When you look at all of the properties, the single dwellings that are out in villages, out in smaller towns and scattered around the country, that is not something that appeals to them. People with gardens, people who want gardens, that's not something that is currently appealing to the institutional lender or the corporate ownership. So for me, there is always going to be a place for the private rented sector. We will always be needed for that space. Those people who are renting as well, think about what the institutional operator is offering. They're offering something that is newly refurbished in beautiful condition, and it's high rents. Not everybody can afford high rents. Not everybody can afford or wants to live, as I say, in the city centres. So, we have to look at this as a bigger macro perspective. There is going to be a problem there, and there's going to be a void. And ultimately, what's going to happen to those people? Is it going to be a privilege to rent?
Yeah, well, I think you're right to identify that. I mean, to me, it seems that where you have these institutional landlords with, very big multiple blocks, that's fine. But it's a sector of the market. It's not the market, is it?
No.
That's the difference. And that's
Exactly
what we mustn't forget, really.
Exactly, 100% agree.
I mean, otherwise, we're going to have these people running a cartel, aren't we?
Yes, a monopoly, once again,
That's what's going to happen.
Yeah, caution.
What about the funding for this sort of thing, Lucy? Is money readily available for these big blocks that the institutions want to build?
Yes.
Is the appetite there?
Yeah, it's actually a large part of what we do. I think one of the big challenges that we've seen over the last couple of years is that people who have either built them and retained them within their portfolio because it wasn't the right time to sell, or because that was entirely their strategy in the first place, the challenge that you have is the change in yields has meant that some of them have actually become near on impossible to mortgage purely due to the leverage, because people have taken higher leverage, say 3-4 years ago, and now they're coming up to the end of their fixed rates, and the yields have moved so much because it has to support the changing the cost of borrowing, that actually the values of these blocks have really taken a tumble. And whilst there is mortgage availability readily there for them, it really is a value thing, and lenders are assessing the value and the loan to value, and they're also looking at the block value as opposed to the aggregate value of the individual units in most cases. So where you have more than, say, 10, that's nearly always the default position that a lender will take.
Quite interesting though, because if you've got a sort of, shall we say, an institutional block, if you want to move it, get rid of it, pass it on, whatever the expression is, you've got to find another institution that will conform with your figures.
And it's usually on a yield assumption.
Yeah. However, on the smaller landlord situation, somebody might be buying for any kind of reason. It might be a pension supplement, it might be a safe place to put a few quid that they've saved up. So the constraints on selling are not quite so strong, are they?
Yeah, there's more buyers in the market, isn't there?
Quite interesting. Okay, well, on that note, we're going to go to our break. So join me again after the break when I'll be asking Lucy and Sara more of your questions. Hello and welcome back to part 2 of Property Question Time. I'm Stephen Galpin and I'm joined by Lucy Waters and Sara Newson. Welcome back. Do the experts think that a return to 100% residential mortgages would kickstart the market and aid the younger generation in getting access to the path to home ownership?
In isolation, I'm going to say no. I think it is a helpful tool, and I don't doubt that it will be useful for some. And I think when used in the right way, sold in the right way, and appropriately governed, the product has its place for sure. And raising a deposit is clearly part of the barrier to entry for some first-time buyers, but you have on top of that stamp duty and legal costs and valuation costs. You know, there's many costs in the home buying process. Take the deposit out of it, yes, to an extent it helps, but actually affordability still, in my opinion, remains the number one blocker, because actually the mortgage still has to be affordable. Generally with higher loan to value products as well, the interest rates are higher, and therefore that impacts affordability.
Let me just put you to test on this one. Right. Let's take down here. A studio apartment will cost you probably £400,000 to £500,000. So with a 25% deposit, with the extra costs of one thing or another, as a young person, you're going to have to find probably £120,000 to enter the market with one room and a bathroom.
Yeah, it's a lot.
Okay. How are we going to get around that? Because, you know, it's just not acceptable, is it? We need people to get on the housing ladder. We need it for the economy, for them to be buying white goods, refurbing places, spending money. And the other point that you mentioned, which was the costs, the legal costs, the evaluation costs, that sort of thing, the stamp duty, they're not fundable, are they?
They're not fundable.
So what's your solution to this as a hardened lender?
I think the proposal, sort of in the bundle of proposals that the government have been making pre-budget, I think one of the only ones that I actually quite like is to flip the stamp duty on to the seller, because that is another blocker. You know, that's a cost that people have in order to buy a home. But actually, all of those costs are one thing. Back to the affordability point, if somebody's raising, say, a £300,000 or £400,000 mortgage, they need to be earning the best part of £100,000, and that obviously depends on what their expenditure looks like, their outgoings and things like that. So affordability is as much of a blocker as the deposit is. And I don't know what you think, but I don't see that changing, because house prices, in my opinion, will continue to grow because we have a supply issue. We won't meet the housing demands. We won't meet the house building demands because we never have done, and we appear to be miles away from hitting those targets. So actually there's a real supply issue, and then on top of that an affordability issue. We had the Help to Buy schemes that tried to address that, which in some ways it did. It got many people on the ladder, and it was a really favoured scheme.
Developers.
Yeah, it helped developers, but it also then creates sort of a future affordability and also a resale issue, because a lot of those properties don't have the value that people paid for them because it was inflated due to the availability of the Help to Buy scheme. So therefore those values have come back, and then people become sort of mortgage prisoners, unable to do much with that property.
But you see, again, the government and many other people in the industry love these 50-50 ownership renting, part ownership, shared ownership. But you see, I don't like that at all, because you're paying a mortgage, you're paying a rent. The two put together are probably more than the single mortgage would be anyway. And on top of which, although yes, all right, in theory, your place is inflating, and you, thank heaven you're in or on the market, but you've got to find somebody who wants to buy half a home, haven't you?
Yeah, yeah,
and that's not all. Talk about a trap.
It's a really tough one to try and solve, because on one hand, you've got the government that's really anti-landlord, that's trying to push landlords out of the market, but then you've got people who have the aspirations of home ownership, and I think that that's embedded into our culture.
Yeah, it is.
And I doubt it's going anywhere from a perception, people want to own their own homes. However, if we don't have affordable rental property and availability of rental stock, the people whose affordability is not there to buy homes, what do they do?
That was my question to you.
What do they do? It's a real challenge. I think the 100% mortgage, it helps, but it doesn't solve the problem in its entirety.
And I suppose you're right, it could cause problems in the future, couldn't it?
Yeah.
That's the difficulty. Sara, how do the experts see the renters' rights legislation affecting the market, and if in a negative way, or even perhaps creating a further stock shortage, will it result in higher rents?
Yeah, absolutely. The Renters' Rights Act, which came in recently, not fully implemented yet, I will add. So we're still waiting for dates for the different parts.
Well, can I just stop you there? I see the government announced that they'd found various flaws in the writing of the legislation, drafting of it, and I think it's being put back again, isn't it?
Well, it's actually passed, so it is law, but the dates of implementation are still to be decided. I think they were suggesting 6 months until the date that the ASTs were changed, so we had the new tenancies that were implemented. In the meantime, I think, ultimately everybody's preparing for it, and there's a lot of landlords who are exiting, and that will increase the rents. So shortage of rental properties will increase rents. However, as I said earlier, potentially those rental properties will just be sold to more professional landlords who will take over. So yes, I do think it will impact the rents. Everything that they're looking at doing right now is going to impact the rents. So I do think we're going to see increases. But as I say, nothing's in yet. The main one was removal of Section 21.
Yes.
So no fault evictions. And a lot of people have said that they're leaving because of that. Now, for me, I don't see it being an issue. The whole Renters' Rights Act, to me, I don't see as a huge issue. If you want your property back, if you want to move into it, if you need to refurbish it, if you want to sell it, you can still ask the tenant to leave. You need to give them a longer period of notice, 4 months, but you can still move that property on if it no longer fits your portfolio. You can sell it to the open market. So for me, I don't see an issue. What we're going to see is less people who aren't professional landlords going in and renting a property out short term, thinking, we'll do this for a while and then we'll step away from it. They won't have that option.
Okay, so let's just go back to the Section 21 or the negation of it. You want your house back or your flat back. Where does the argument take place, if there is an argument, about your reasoning for wanting it back?
The argument, literally, because it's Section 8 notices now, so you have to adhere to one of those notices. And that would be, if you're selling the property, you are allowed to serve notice and take your property back. You do have to legitimately try to sell your property. There's no getting around that. And if the property is obviously in desperate need of full refurbishment or redevelopment, then the tenant can't stay in there.
But where does the argument take place? So I'm a tenant. You're saying you want it back because you want to sell it, or you need to sell it, and I say I don't think so. I think you're fibbing, really. I think you're just trying to get me out. So where does the argument take place? Is it the county court? Is it a tribunal? Or where?
Yes, it would. I mean, if they contested it, but I don't think tenants would contest it. They're humans at the end of the day, and I don't think, yes, you're going to get one or two problematic tenants, but overall, the majority of tenants are fantastic. Touch wood, I've had very few issues in my 20 odd years of doing rentals, managing other people's.
Come down to London.
Oh gosh, okay. I won't then.
Yeah.
Tick that one off, cross it off.
It's a difficult one, because I can just see the courts getting awfully clogged up on this, and I can also see that if there is a problem over this, if it becomes problematic to get the decisions made, then Lucy's lenders are going to start fidgeting about funding properties. This is the difficulty.
The concern over the courts is because now tenants have the right to contest any increase in rent and say that they don't believe it's in line with market rent. They've always been able to do that, but previously the jury could turn around and say, no, actually, we think that your landlord's being fair and we think it should be another £100 on top of that. So it could have gone either way. That's no longer the case. They're no longer going to lose out. And all they're going to do is, while they wait for the hearing, is they're going to postpone paying that increase.
Yes.
This is where the big fear comes from landlords. But as I said earlier, I don't think the majority of human beings would turn around and do that. I think it's only going to be certain tenants that play the game and look to contest it each time the rent's increased.
Yes. So overall, are you happy with the legislation?
I wouldn't say I'm happy, but I will accept it and we can work around it. Yeah.
Okay. Do you agree with all that, Lucy?
Yeah, I think that raising standards is always a positive. Unfortunately, landlords have had a really tough time. So the fear of people being able to abuse the system and find these loopholes is clearly a concern to people. And then that has a knock-on effect to lenders. But I think if we can raise the standards and compete with the professional landlord concept of, trying to squeeze all the smaller landlords out, if we can say, well, look, we're all adhering to the same standards and everybody's, playing by the rules, then actually the long-term benefits hopefully will have an overall positive impact on the market.
Okay, well, on that very optimistic note, we're going to end this show. So I'm going to say a big thank you to Lucy Waters. Thank you for coming in, Lucy.
Thank you, Stephen.
And big thank you to Sara Newson. Thank you for coming in and travelling all the way down to London to see us. I'm Stephen Galpin. Join me again next time on Property Question Time. That's London TV, channel 117 on Sky, 7 o'clock on Wednesdays. See you next time.